Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 20th, 2011. Now, to get started, we're again going to revisit the ProShares UltraShort, the ProShares UltraShort Oil and Gas DUG. We can see that we have the potential here for a big move to the upside on this particular ETF, looking at those light sweet crude contracts that I talked about in the Forex weekly outlook this week, and of the last several weeks that I felt that crude oil was easily going to break through that 95 level and start pushing lower. Now we're stalling a little bit down around the 93.50 area, but I anticipate that that will gain some strength to the downside very soon. Now, looking at this fresh triple EMA cross from Vantage Point, the predicted short, medium, and long-term differences all at trend ready, and the predicted MACD and the predicted TSI again pointing much higher. So when we look at this, we take notice that just a few short months ago, the ProShares DUG was sitting up in the 46 level. So the potential to buy into this down around anywhere above 27.62, very, very attractive to say the least. So when we look at these, I'm going to break this down now by crossover. We can see that our short-term crossover here from Vantage Point it's been crossed over for a few days now. We were buying it last week also. The medium-term crossover looks good, and the long-term crossover just a few days old. So from here, we're going to go into that daily report from Vantage Point and see if we can fine-tune our entry point. We know that that 27.62 area is going to be a significant level of support for tomorrow and for probably the rest of the week. So we're looking to build from here. For tomorrow, we have 28.80 and 30.69 as the predicted high. Now, when we look at this, we're looking at the series of higher closes. We can see where we were 27.20, 25, 26, and then today's close 29.27. We're moving aggressively higher on these closing prices. That is something I definitely look for. So 28.80 is an area of interest for me tomorrow. Now, looking at the Vantage Point predicted high and predicted low, bringing that in, you can see that we're again beginning to tag the predicted high or just above it, and we're not quite getting to the predicted low. So for tomorrow, 28.80 again looks like a pretty good area to start looking at longs on this. We're going to get a little bit more aggressive here, 28.80. For your less aggressive traders, I would continue to monitor the market and buy down to the 27.60 level at the very least. And our initial target on this particular trade is going to be, your intraday traders will be looking at 30.68 for tomorrow, but your medium and longer term traders, I would be targeting between 32 and 46 on this particular trade. Now, that's our first trade for tonight. Now, our second position for tonight is going to be in the Forex market, specifically the New Zealand-US currency pair. Now, my concern is we're getting a little bit oversold on gold, some of the commodity prices, specifically gold. Not so much silver, but a little bit on the gold side, and we could see a bounce. Now, key levels, we've closed at 76.51. Our key level comes in 76.39. This is a key level of resistance along with 75.97. And now 75.63. We've managed to slip back below the Vantage Point predicted moving averages. You can see that this is the second attempt to break through this resistance. And again, we've had a significant failure, going into the close. Now, the predicted short-term difference was getting oversold and it bounced higher. Predicted medium-term difference also starting to move up a little bit, but the point of interest here is the predicted long-term difference. It is not, and I repeat, not in oversold territory at least, and it continues to point down. Now, this is the advantage of using multiple indicators like this along with the predicted MACD and the predicted TSI to confirm these moves. When we break this down by crossovers, we can see that the short-term crossover warned us that we were getting a little choppy in the interim, but when we look at the medium-term crossover is still clearly pointing down, as is the long-term. Now, if we want to break this down even further, we look at the Vantage Point and how they're calling the predicted high and predicted low. This is a typical candle for Friday trade. What I repeatedly tell my own clients is to just stay out of Friday trade, or when you go into Friday trade, use it to get your price for Monday. And this is always a very good play, because this is what happens. You get a candle that's simply out of the norm, and you have profit taking, you have all these different things that happen on Friday, and they usually tend to happen on Sundays also at market open. So market open, market close for the week is usually not a great time to trade, guys. And again, I warn my own clients of this repeatedly. When we look at today's candle, this comes back into the norm now. We're staying within the range for today, and you can see this other bar here to the right of me, of my cursor, is showing for tomorrow, which is down, which I believe to be more accurate. Now, again, we're going to go, the key level we've identified up in that 76.39 area, we're going to sell into that area. Now for tomorrow we have 76.16, 74.94 for the predicted low. Your more aggressive traders can look at the 76.16 level as your entry point. Your slightly less aggressive traders, where we're going to have some choppiness and thin trade, they can watch that 76.39 area, and again, that would be a premium sell to me under the current market conditions. Now again, we're going to have choppy trade going into year end, but there is still some opportunity even in this final week before Christmas. So with that said, these are the market positions for December the 20th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.